And they've been working to simplify the entire process and bring in a lot of benefits in terms of regulations for investors once they become accredited. So IVCA has created a series of webinars. This is the first one, and I'm happy to share that Rajesh, who leads the business at NDML, and Vivek, who's a partner at Khaitan and Company, they closely work with IVCA, and they've been gracious enough to take out time and come here and be a part of this webinar and explain to the audience the entire process in terms of with specifically today NDML, how the accreditation will work. So if an investor wants the status, then what is the entire process like? So Rajesh will take us through that. As well as Vivek is here with us to explain to us legal considerations in terms of regulations, how they've evolved, and what this entire accreditation means. Plus, at the same time, what are the benefits for an investor to become accredited? Access to a regulatory basket of asset classes. So that is something that Vivek will take us through. So without further ado, I would like to get Vivek over here so that he can take us through the legal considerations and benefits to the accredited investor. Thank you, Vivek, and over to you.
Sure. Thank you, Rohan. Thank you, Rohan, for this. Good evening, everyone. So let me just share my screen. So I have something for you to consider.
We can see the screen, Vivek. You can proceed.
Sure, perfect. So the whole AI regime, I mean, if you sort of look at it, was an experiment which SEBI started. I mean, in the 2019 and 2021 types, when we had the COVID regime, or we had the COVID era, as I can call it, we first started with the AI concept in the form of angel investors. So SEBI introduced angel funds, and there we had a specialized group called angel investors. So what were angel investors? They were basically expert investors to that extent. And then later on, during the COVID period, we saw the introduction of large value funds, and then also with the PMS regime undergoing a change where SEBI sort of restricted investments in unlisted security. There it came up with a classification saying that we can have an AI large value PMS to that extent. So what is exactly the AI concept? So globally, the AI concept has been very predominant. In India, when we look at alternate assets, what SEBI has done was that it always looked at the minimum commitment, which the regulator thought was the reasonable amount to determine the level of sophistication or the risk appetite of an investor. So when we go back to the VCF regime and the early days of PMS, it was 5 lakh rupees. That regime from an investor perspective moved to 25 lakhs and later increased to 50 lakhs for PMS. But for the AIF regime, what SEBI considered was a 5 lakh from a VCF regime to a 1 crore was an investor who could invest 1 CR in a product was considered as sophisticated to that extent by SEBI. So in India, we never really had a classification. It was always a criteria which was based on the capital which you had to invest. So the capital at risk determined your ability to basically classify as a sophisticated investor or not. And practically, if you look at it, I don't think that would be the right sort of benchmark to determine whether an investor is sophisticated enough or not. So this led to the introduction of the AI regime. The AI regime today in India, it is going more by the fact that what is your level of income and what is your net worth to that extent. So what it takes into account is that your risk appetite or your ability to have a diversification of risk. And as I go more into the presentation, I will sort of list down to you how SEBI has tried to de-risk or provide flexibility to AI investors to sort of have investments in various products to that extent. And they've created a specific basket of securities where AIs may invest. Like from an AI concept, while India has stuck to the fact that it is based on the net worth and the income of the individual, globally, some of the jurisdictions also look at investors from an expertise perspective, whether they have knowledge of that security or not. And to that extent, when we look at it in India itself, we have basically what is there is a basket, like an uneven adoption of the concept of AI. So when investment advisor regime came into place, there was something called risk profiling. So basically, an advisor was required to do a risk profiling. That is, he was supposed to apply a standard to determine whether the investor was sophisticated to invest in the product or not. So I think with this formal AI framework, we've come a long way from what India has seen to that extent. And it also gives, from a SEBI's perspective, it gives it to basically have a investment product which basically gives you an access to a basket of securities which is in a more uniform adoption basis to that extent. So I'll just go to my next slide. So the accreditation, what it sort of provides for is basically it's a sophistication of an investor in a formal and objective manner, enabling the investor to basically meet specific criteria provided. Today, it's a net worth criteria to that extent and income criteria. I hope this sort of doesn't go into expertise to some extent, where there is some discussion that it may look at a NISM certification even from an investor perspective if they don't meet the net worth test. But that is something which we have to see. But I think it just creates a global framework for all investors, sort of to that extent. So I think it's a calibrated approach which SEBI has taken to come across this AI framework to that. Now, who is an AI today? So, what is an AI is today anybody who can be an accredited investor. So, in case of an individual HUF or a family trust or a sole proprietor, you need to have an income of at least 2 CR per year, per financial year, and a net worth of at least 7.5 crore rupees to that extent, out of which you need to have financial assets of at least 3.75 CR that way. So what SEBI has looked at when it has considered the network, the definition, or when it has sort of looked at classification of an AI, it has not only looked at your annual income, but your exposure to financial assets. So given that if you have more than basically 3.75 CR in the form of financial assets, it has taken that classification that you are sophisticated enough to invest in some of the riskier projects to that extent. Now, when it comes to companies and body corporates or even sort of trusts which are not family trusts, the net worth requirement is a higher amount of 50 CR. Where I think there is a bit of an ambiguity is like in case of partnerships, which are general partnerships, each partner is required to be an AI himself for the partner to qualify. So I think when we have to look at the second phase of development of AI, some of these criterias or some of these investment vehicles, as we can sort of look at it, or investors, we may have to sort of have a relaxation in the classification or the criteria which is there for the investors.
With
Now,
Rohan this side, I just wanted to intervene. We are not able to see the second slide. So,
okay. You can see the criteria for accreditation right now?
no, we are just on the main slide. The heading, which is accredited investor, that main slide.
Oh, okay. Let me just stop share
Okay,
and reshare this.
sure. In the meantime, while Vivek shares the presentation, I also wanted to highlight that we'll be able to take questions at the end. So do put in your questions in the chat box so that at the end we can answer those questions. Thank you so much.
Rohan, is the screen moving or?
No, we are not able to see it right now.
Okay, I think I'm having some technical glitch.
Okay.
Are you able to see something now, Rohan?
No. So maybe what we could do is, if you want to take a few minutes, we can probably get Rajesh to, share his entire piece, and then
Sure,
we can
sure.
continue. Oh, okay, sure. Yeah, Rajesh, Rohan this side. So while Vivek, does a rain check on the logistics in terms of that, sharing that presentation, if you would like to, share with us the entire process of accreditation and how it will work specific to NDML, that would be great.
Sure, sure.
So over to
So
you.
thank you, thanks everyone. I'm audible. I hope
Yes,
I'm
yes, you're absolutely audible. Yes.
And thanks, Rohan, and thanks for all of you who have attended for joining this session. I will also try to share my screen. I mean, I think.
Okay, so I think in the meantime, Vivek was able to solve the issue.
Yeah,
So,
I think then we can continue.
okay. Vivek, we are able to see the screen. If you want, you can continue with your session.
Sure, Rohan. Thank you.
Yeah.
So
All
what
right,
I just, sort of previously mentioned was the whole evolution of the AI regime and how SEBI has come so far from from the investor perspective. So practically, we have moved from an investor limit, like an investment quantum perspective, to a whole qualification where we actually look at the investor's net worth. Now, today, if we look at it from an investor perspective, what are the benefits that an investor have, or what are the opportunities which the investor has in the market? So SIF is an opportunity which is there for accredited investors. The PMS regime is there. The investment advisory regime is there, and the in AIF regime is there. So when we look at the AIF regime, what SEBI has done is that from an investor perspective, it has number one, if you are an accredited investor, for a normal AIF, they have mentioned that there is no investment limit per se, which is applicable. So to that extent, from your exposure perspective, an AI can even invest below the 1 CR limit in a particular fund. So an AI to that extent with that same 1 CR may be able to get exposure to more securities or more funds to that extent. Secondly, there is a specific category for AIs, which is called the large value fund for accredited investors. So there again, as long as you are an accredited investor and investing the minimum sum, the SEBI has sort of let you launch this large value funds. And the benefit of large value funds is that from a concentration perspective, etc., SEBI has given some leeway, and also from a compliance and distribution perspective, where otherwise you couldn't have senior junior structures, SEBI has given leeways to specific accredited investor funds that way. Additionally, when you have AI investors, the entire angel fund regime has moved from an angel investor classification to AI only angel funds. So going forward, angel funds may only have AIs as their investors. So it's going to be a big steep curve for angel funds to actually have all the investors sort of onboarded and qualify as accredited investors. So on the AIF side, these are pretty much today what the landscape is for angel investors opportunity-wise. Also, what SEBI has done is today it has come up with a regime where there will be only AI funds, which is accredited investor only funds. So there, any other investor cannot participate in that fund if the person is not an AI. And from that perspective, SEBI is looking at giving regulatory benefits in terms of lesser regulatory compliances to that extent, but it is more in a calibrated manner that the regulatory safety for AIs is not taken away, while the basic checks and balances which is required from an AI perspective in terms of valuations and some of the guidance which is there, all of that will continue to be there, but there will be flexibility in terms of distributions, etc. Now, what we have also seen is that the SIF regime, which was recently sort of introduced by SEBI from a mutual fund concept, they have also mentioned that an AI can invest in a mutual fund or an SIF without any investment limits. So the 10 lakh limits, which is applicable for a non-AI, to that extent is not applicable for an AI investor. So this is a big benefit which is there for anybody who is sort of registering themselves as an AI. And I mean, it just opens up a huge basket of securities to that extent. I think the biggest AI benefit is today, if you look at a portfolio management regime or the investment advisory regime, this sort of enables AIs to participate in this specific portfolio manager funds, which are strategies which are only catered to large value AI investors. And that permits them actually to do unlisted securities and basically look at other hybrid strategies which they may have, which sort of provides fund managers the opportunity to manage liquid funds in a non-pooled fashion. So when we look at pooled funds, yes, AIs do have the benefits of investing into an AIF, but from a non-pooled fund perspective, and specifically when it comes to wealth managers and specialized investment advisors, SEBI has taken that into consideration and let them manage AI money only, where they have given you the full flexibility to decide on what securities you want to sort of look at. So this basically opens up a lot of avenue for fund managers. Now, just quickly going through the slide. So the minimum investment requirement is something which is done away from for AIs. Co-investment, again, this is a very specialized and new regime which has come in the form for AIF investors, where AIF investors are permitted to co-invest alongside with the fund in co-investment opportunities. But this opportunity is something which an AIF manager can only offer to its investor if it is an AI investor. So again, when we look at the whole regime, the way it is moving is SEBI is moving more towards an AI-geared framework. Now, the benefit of that is from an investor protection perspective. Yes, you are dealing with sophisticated investors who understand the risk of this risk of the products. I think what SEBI wants to get away from is frivolous investor complaints to that extent, where investors, while they have invested the 1 CR, but they have not sort of understood the risk profile of the product. And we've seen multiple claims where people have been sold AI products under the garb that there is going to be a fixed return at the end of the year or end of the period, which is not the case. So the AI framework sort of gets us away from such situations to that extent. Yeah, Rohan. So I think from the benefit part, I've pretty much covered the benefits which are there. And I'll like to pass it on to Mr. Rajesh.
Thank you, Vivek. So, good evening, everyone. I mean, Vivek have covered it nicely on the different benefits of getting accredited kind of a thing. I also have a small presentation. I will just share my screen. Hope I'm visible. Rohan, is it visible?
Yes, we can see it.
Yeah. Is the slide moving?
Not yet.
Is it moving?
Yes.
Yeah. So I'll just take a couple of minutes, a couple of seconds to just introduce about NDML. NDML, as you know, we are the 100% subsidiary of NSDL Data, NSDL, which is currently doing close to around 7 regulatory businesses. So it is very important here because if you look at it, accreditation, the entire ecosystem is evolving around a key concept called KYC. Since NDML itself is a KRA, the ecosystem is closely knit. And NDML also have an RTA division, which takes care of various RTA services for AIF. So, so ideally, NDML is poised to service AIF in terms of both in terms of KRA, then for KYC, RTA, as well as for accreditation. So this is all about the regulatory businesses which NDML currently operates into, which also gives the confidence in terms of the compliance aspects or the compliant procedures which we follow in our system, the data securities measures which we implement in our system. Now, Vivek have already covered the benefits of accreditation. I will touch upon the various eligibility criteria or the processes which, as an accreditation agency, NDML follows. Currently, as you all know, there are two accreditation agencies which are available in the country, and we are one among them. In fact, there were three, NDML, CVL, and BSE. BSE have surrendered their license and passed on the data to us to service their clients. Now, if you look at accreditation as a service, there are two concepts. Either the customer can opt on based on their income, or they can opt on based on their net worth. If that is not happening, they can go for a combination of that. So, which means either annual income or net worth, or a combo of annual and net worth is the way we, based on that, we will issue the certificate kind of a thing. Now, who can be the accredited investors? So we have clearly defined the set of people or set of investors who are eligible for that. If you look at it, there are broadly around 9 categories. Out of that, 1 is deemed category. There are remaining 8 categories of people who can apply for accreditation. And all these categories of investors will be accredited based on their income or net worth, or a combo of these two. Now, how to become accredited? It's a very easy step. Register with NDML as an accreditation agency, submit the applicable documents which are relevant to them, pay the fee, and collect the certificate. Now, how to become accredited? So that is the most important thing. In NDML, we have 2 modes of doing accreditation, which is offline as well as in online. In online, it is very simple process. There is a website which is dedicated for accreditation, which is the site is given there, aa.ndml.in. Any customer can go there, any applicant can go there, click there. It is actually a 7-step process. It will hardly take 10 minutes to complete the entire process. The entire accreditation will get completed over there. In my next slides, I will show you the screenshots of each of these 7 steps. The other option, those who don't have an access to online facility or not so convenient to get do the online, we have a mode called hybrid model. So this customer or the applicant can submit the application to us via an email through some editable PDF as an application form, and make the payment to the designated bank account, and they will receive the certificate. So it's actually, as shown in the slide, it is actually a 3-step process. Register, upload document, and get it certificate. Now, there are 2 modes of doing accreditation. Either the investor can directly come to our website, submit the application, make the payment, and get it registered. Or on behalf of the investor, the investment providers, the AF, PMS, or the RIAs, they can also do accreditation on behalf of the investors. But for them, there is one more step, which is called they need to empanel with or associate with NDML as a channel partner. So for investor, it's a 3-step journey, and for an investment provider, it's actually a 4-step journey. The first being getting empaneled with us. We will do our due diligence while onboarding the investment provider, so to ensure that they are acting on behalf of the investor and they have taken all the necessary consent from the investor. Now, for us, the philosophy of accreditation is very simple. Whether the criteria is being met, whether they are doing the validation, we will do the validation, do the verification, and they are allowed to get in the investment. There are 2 aspects which we need to see in accreditation service certificate which we provide. One, the certificate is valid for 2 categories. One is either for 2-year certificate or for 3-year certificate. Depending upon the requirement of the customer, we will provide that. And joint holder is also available. The SEBI have clearly defined the guidelines. The spouse can become jointly apply, or a parent and child can jointly apply. And these are the document criteria which are available, or it is the documents, various documents which has to be submitted while applying for accreditation. Now I'll take you to the website. The site is just simple, aa.ndml.in. I'm sure you can see my mouse moving. So as a customer, he can come here and click on this button. The new customer, he can come here, click on this button. It will take him to the next page. As a PMS, AF, or a registered investment advisor, he need to come here and click here. Rohan, my mouse is moving, right?
Yes, absolutely. We can click moving around.
So as a customer, the customer can come on this page and click on this button, or if it is an investment provider, he can come and click on here. If in any case, if the customer or the PMS provider has to come back again, they will have to come and click on this, so that this page will take him to the previous stage where he had dropped off. And on the right hand side top, you can see important links. So if you click here, this page will open. So it will show the complete document checklist, the tariff structure, the SOP, what are the SOPs which we follow for the certificate verification and for certificate issuance, and what are the grievance mechanism which we policies, and the policies belonging to the cancellation, refund, and the various undertakings are available. So it is transparent, completely transparent. The customer as well as the investor as well as investment provider can just go to this link and see and download it. Now for the customer journey, it is like this. So which means the customer clicks on here, the next page will be the first page will be here. So he'll have to select the category. As I told, there are 8 categories of investment. He can select the category which is belonging to on this. And based on the category or on the basis of accreditation, you need to select either the annual income basis, net worth, or annual mode. Based on this selection, either the investor category selection or on the accreditation basis category, the following pages, the next pages will auto-populate what all are the relevant documents which are required. For example, if it is annual income basis, it will ask for the ITD details. If it is net worth details, it will ask for the net worth certificate. So the system have that capability to understand and throw the actual requirement which is applicable or required for this certification. Similar, if the accreditation certificate validity the customer chooses for 2 years, it will ask for previous 1 year details of income. If it is asking for, if the customer is choosing for 2 years, 3 year certificate, it will ask for 2 previous year details. So the system have that capability to throw the required questions to the customer, so that the customer or the investment provider can upload the respective document. So this is point number 1, which is the basic information page. The next page, it will check the KYC database. So based on the KRA, we will do a check, and we will show whatever details are available in the KYC, and we will allow the customer to move forward. If there is any change in email or mobile, which is different from the KYC database, the customer can still proceed by submitting certain undertakings. So the system will throw that option also to the customer in the subsequent steps. The third, the data will be, as I said, the data will be fetched from the KRA. It will be shown to him. Then he'll have to put the required details. Next is registration is successful. So here the customer have done the registration. Now next page, he'll have to make the payment, document submission, and he'll have to go to the payment page. So the payment will be automatically calculated based on the year of certificate and the category of the investor. The customer has to make the payment. Once he completes the payment, a unique application ID will be generated, and an email will be going to the respective registered email ID. Post that, in our side, we will do the verification, and we will issue the certificate. Then the certificate will be available for the customer to download from this site. And as well as a copy will go to the registered email ID. So this is the format of the certificate which the customer gets. Similar, if I'm just taking back, similar here on behalf of the customer, if the PMS or the AF or the registered investment advisor gets there, he will also be having one more page which talking about on behalf of the customer, you need to raise some consent, as well as he will give an option to do a bulk upload. So rather than doing 1 by 1 customers, he can do for the bulk kind of a thing. So this is the journey. So this is a certificate which is getting generated. So once the customer gets certified, the second stage is the verification part. So verification comes when a customer have taken an accreditation certificate, and later he have approached a different AIF for his investment, and he will be informing that AIF that I have already an accredited investor. In this case, this page is being used for the verification. The investor or the investment provider can come to this page and do a verification of this certificate, whether he can see whether the certificate is valid or whether it is active in active status. So this is a verification page that will come. Now for online, it is very simple. You just go to the website, which is aa.ndml.in, or if it is hybrid mode, we have a dedicated team which is taking care of that. Yeah, you can note down the email IDs which is mentioned over there. You can reach out to any of these colleagues of mine. They will help you to do this certification on an offline mode or on a hybrid kind of a mode. And these are the charge structure which is there. It is already uploaded in the website on the important document section. You can very well go there and check the details. Thank you. So this is my short presentation from my side. So I hope we can take the Q&A.
Yes, thanks Rajesh, and thank you Vivek for these sections in terms of making the audience understand the entire process that one has to carry out to become an accredited investor, and how from a portal perspective you're simplifying the entire process so that it's a seamless experience for the investor. At the same time, we would really want to appreciate SEBI's effort in this, because what Vivek alluded to, that bringing in those benefits in terms of a regulatory basket of asset classes which this accredited investor can get access to, is something that over a number of years SEBI has worked on. So really appreciate that effort as well. We have a few questions that people have asked, so I will just like to ask those questions, and if you could answer those as well. Beginning with Sanjay, he's asking, I think this is specific to angel fund. Is a sponsor entity still allowed? If yes, what is the role of sponsor now? And do partners in sponsor also need to be accredited? Vivek, do you want to take that?
Sure. So sponsors in angel funds are permitted, and practically the AIF regime requires you to have a sponsor in place. So to that extent, I think when we look at the requirement for an angel fund or the compulsory or the continuing interest, it has been sort of now prescribed by SEBI to be 50,000 per scheme to that extent. So either the manager can pay it or the sponsor can pay it. I think the sponsor can continue as is basis without each partner. So continuing to be an accredited investor. I think I would rely more on the fact that it is the sponsor of the fund as opposed to an investor in the fund. So I will continue with sponsor as is. We may not need to necessarily register the sponsor or get an accreditation for the sponsor as an AI. And typically we have sponsors either as company or LLP. So then you would have to go back to the 50 CR of net worth requirement, which is there. So I would go by the fact that I have already got the status as a sponsor.
Sure. I think the next one is also in reference to angel funds. If there is no minimum investment, the first question in reference to that is, how should we calculate expenses and fees in the absence of a minimum contribution? Second is, can we still draw down for fees, considering the language in 19G states the manager shall accept contribution from an angel investor for investing in an investee company only after obtaining approval from the angel investor for such investment? And the third one is, if some investors are prepared to commit a specific amount, such as maybe INR 20 lakhs, can we implement differential drawdowns? So
I think these are a lot of questions. I will drop my email address, but I think going by the fact that from an angel investor perspective, the basic principle which SEBI has put in is that you need to have an allocation policy. Now, once you have that allocation policy, you have to basically issue the investment opportunity to all investors, right? That is the basic requirement of the allocation policy. Once an investor says, yes, I want to invest, then we have to draw down on a pro rata basis, which is as per the circular and the allocation policy. For expenses, yes, you are free to draw down capital to meet the necessary expenses.
Sure. And I just wanted to highlight, because of the questions that are being asked, this webinar is just a guidance. So, if you want to seek a legal opinion on the regulation in reference to some of the nuances of regulation, please speak to your legal advisors and get a, a written opinion from them on this. So we will be able to just guide in terms of what perspective we have on specifically these policies. I think this question is for Rajesh, but he answered the question. It was, what is the fee to get accreditation done? So I think you answered it at the end of the webinar, where on the portal itself, the charges are mentioned.
The charges are clearly defined there based on the category of the investor, based on the number of years of certificate. So it will vary from 5,000 for an individual investor and go up to around 22,000 for a body corporate. It varies on the year of certificate validity as well as the category of the investor.
Sure. The next question is, can investment distributors also be empanelled with NDML?
Yes, yeah.
Sure.
So as I said, there are two ways of getting a certificate. One is investor coming directly, which is DIY module, and on behalf of the investors, the investment providers can do that, which we call as OBO mode, on behalf of mode. For that, only things that we will have to do certain due diligence at our side before onboarding the investment provider and ensure that you guys are acting on behalf of the investors. So that process is called empanelment. So for that, the AIF/PMS/RIAs has to empanel with us. We will do the due diligence and we will allot you a empanelment code. Based on that code, you will be able to submit application on your behalf, on your investor behalf, and the system will be able to recognize you. So that whenever the certificate gets generated, one copy of the certificate will be issued to you as well.
Sure. Rajesh, for that, I think the next question is also for you. What would be the renewal process of the certificate?
Yeah, so certificate is either if it is 2 years and for 3 years, at the end of 2 years. So whatever is the applicable regulations or rules in terms of the eligibility criteria, the customer has to resubmit it. So to give you an example, BSc, somebody have applied through BSc while BSc was active as an accreditation agency. When BSc have surrendered their license, the data had come to us, and one of the customers' certificate got expired. So he have approached us, and he had to submit all the documents which are currently relevant for him. So we'll see what is the latest network of that. Based on that, we will issue it.
Sure. Now, I think the next one is for Vivek. The investment opportunity given to AI only AIF would be discretionary or mandatory?
The AIF vehicle, other than angel fund, is a mandatory sort of investment objective if you look at it. So I don't think there is any discretion which the investor have to make or say no to an investment. In an AI only fund, it is like a normal fund, but only for AI investors. So the way SEBI is looking at it from a framework perspective is some of the regulatory overhang which is there for a normal AI, that is sought to be reduced from a fund manager perspective if he is only dealing with AI only fund, AI only investors. So yes, it is non-discretionary from an investor perspective. It's a blind pool.
Sure. I think many angel funds have actually joined us today because many of these questions are coming from them.
Yeah.
The next one also is, post the glide period, what happens to angel investors who do not meet the accredited investor criteria? I can answer that for you. So, we've had a positive dialogue with SEBI. In fact, they've actually gone out and spoken to MCA to solve the 200 investor issue, of which most of the angel funds were in default. And that's wherein this possible solution came in by amending the ICDR regulation. And as long as you have accredited investor in the angel fund, you can have any number of investors. That probably answers. So after the glide path is over, you can have n number of accredited investors as part of the angel fund, but less than 200 non-accredited investors. And we also, since there is an audience for angel funds today, we also wanted to make you understand that we made a representation and had a dialogue with SEBI on this as well, given the concern around shrinking investor base and higher financial thresholds for accreditation, specifically when it comes to investors who are part of angel funds. And they've heard us out, and they've looked through the representation as well. And what they've stated is that all these policies, they will be looking through the impact of these policies. And if there is an adverse impact on the investor base and the startup ecosystem is getting affected, they definitely are going to get into in depth about what could be done to the policy so that such an adverse impact does not come through. So they are very proactive and engaging as well in terms of crafting this policy. So but as of now, since this entire amendment has been done, it will take some time, and once the review and impact is studied, then only any further change can happen. So that's something that we as IVCA wanted to inform all the angel funds. Next, moving to what is the process of accreditation in case of a minor? So this is for Rajesh.
Yeah. So minor, the parent can apply on behalf of the minor, but there is a slight difference of a joint. So it will become a joint application. So in case of a spouse, what will happen? The joint income of the spouse will be considered for the eligibility. Whereas for a parent and child category, the one person, either the parent or the child, should have that net worth.
Sure.
Yeah.
Thanks, Rajesh.
But to answer your question, yes, a minor can apply, but along with this parent.
Sure. The next one is from Climate Angels. They ask what documents are required for AI registration for net worth. I think SEBI has been very clear now. Only two documents are required. One is an income statement, and other one for net worth is a CA certificate.
Correct.
So these are the only two documents required now.
Yeah. The only point is that the CA certificate of net worth has to be attested by a CA with his UDIN number. DIN number.
Sure. Sure. What is the definition of financial asset for the purpose of calculating net worth? I think the principal residence, the residential property, that is excluded, and rest, all the entire net worth of rest of the assets is calculated to, understand the threshold of accreditation. So that's done. Then Mount Judy Ventures, this is for Rajesh. Is it mandatory for investment providers / AIFs to get registered on NDML? Are there any benefits of being registered as AIF on NDML?
Yeah. So yes, mandatory. Why? Because it is basically mandatory in sense if you want to act on behalf of the investors, then you'll have to mandatorily register with us. The reason is twofold. One, we need to ensure that all the due consent from the investor has been taken. Number two, we'll have to do a due diligence as part of onboarding you, the AF. So that's why we wanted to register you. Second, the advantage for you is that the moment you register with us, the system will be able to recognize you. And whenever this certificate gets issued, you will also get a copy of the certificate, point number one. Point number two, whenever the certificate gets expired, that point of time, the alert also will come to you so that you can reach out to the customers.
Sure.
And the third, you will have the advantage of doing a bulk upload. Rather than sending, let's say an AF is having 200 odd clients, when you are suggesting the client to go individually to the website and do that, you can give a customer service or a delay to your customer saying that you can collect. Anyway, you have the data with you. You can pull or push all the data through a separate utility to us, and you can have a bulk certification done for all your eligible customers.
Sure. I think this is for Vivek. If there is a change of ownership in a Cat 1 angel fund, would the new rules be applicable from day one, or would we still have the 1 year glide period?
There's a change in ownership.
I think they've sold the registration to someone.
Yeah, no, I think, see, the glide period is applicable sacrosanct to all angel
Yeah.
funds. So there's no leeway there for anybody, even if you have a change in control or anything which happens, it's applicable. The glide period continues. I think the only question is, which we will be struggling with, is what happens to the investors who do not sort of get themselves registered as a angel investor. So there, I think Rohan mentioned that there is some dialogue with SEBI, because I mean, at the rate at which I understand that the accreditation is happening, it's almost 300 accreditations in the month of September or so. I had a chat with Rajesh and he mentioned that they're doing about 10. So we definitely have a long way to go. And given the number of angel investors each of the funds have, it's a very daunting task, if you ask me.
Sure. We move on to Mount Judy Ventures again. Is it required for an investor to remain accredited throughout the life of the AIF/fund, or is the investor required to remain accredited only during the drawdown period?
So to make any drawdown, it would need to be accredited. So when we look at the life of the fund, yes, I mean, you would draw down for expenses also. So unless you have finished your capital commitment, then you can probably take a call. But otherwise, it is going to be a situation where it would the investor would need to be accredited. And that's where I think one of the concern is that we are giving accreditation for a period of 3 years, but as AIFs, it is each of our funds are 8 to 10 years. So getting a person accredited twice is going to be quite a challenge. I think some of these operational issues is something which we have to deal with and sort of get a guidance from SEBI on how to go forward with some of that.
Sure. Rajesh, on the answer that you gave for a minor, someone is asking what will be the name on the certificate. Will that be of the minor or the parent, the guardian?
Jointly. It will be mentioned as jointly. Yes.
Sure. So that's something. Then typically, how much time the entire process is taking after documents are submitted?
Yeah, so that's a good question. So in fact, thanks to SEBI for all the relaxation and all the guidelines and the clarities which are given, which came in September. So we have seen a very massive spurge in volume on a daily basis. Prior to September, in a month we used to get hardly 10 applications or so. But now it is happening on a daily basis, close to 10 to 20 applications which are getting come. So there are two things I need to tell. One, if the customer is going through our website and doing the registration, it hardly takes 10 minutes for him to complete the journey. So for him, it is that 10 minutes journey. And once he submits the application, if all the applications are in proper order, there are cases we have issued the certificate on the same day also. But or to be on the safer side, with the process, if the with the document verification kind of thing, you can express T+1, max T+2. It is not going beyond T+2. When coming to AF on behalf of the customer, so we are having a history of T+1, which is this is observed over the last 2-3 weeks after the spike in the volume.
Okay, got
the
it.
basic condition is that document has to be in order.
Sure.
So if the document is not in order, there has to be a lot of to and fro communication. The customer has to resubmit. The applicant has to resubmit the required documents. We are not rejecting any applications. We will inform either the investor or the investment provider about the gap so that they can refile it.
Sure. Okay. The next one is again with reference to changes in ownership. So would a change in ownership of fund investment memorandum of Cat1 Angel Fund be investment manager of Cat1 Angel Fund be considered by SEBI as tantamount to the establishment of a new fund, thereby requiring compliance with the amended regulation from the outset?
That is going to be a change in control. So the fund will continue as is basis, and you just have to take SEBI's approval for the change in control which has happened. So it's not a new registration certificate which you will get. So you'll continue as an existing fund as opposed to a new fund.
Okay, sure. Rajesh, someone is giving a feedback that our experience of the timeline is a little different. It took 7 to 9 days.
So I saw
You know,
Sanjay,
all
right?
the
Sanjay, you can reach out to us,
Sure.
or you can directly mail to me.
Okay.
Let me check what is the case of that.
Okay, sure. Sanjay, you can reach out to IVCA and you know, we can get you in touch with Rajesh on this. Or if you are in touch,
Yes, Sanjay, can you just ping me what is your company's name or AF name so that
yeah. So that's done. I think I'm not taking the questions which are being asked by an anonymous
okay.
attendee.
Yeah.
That's
Yeah.
you know, people need to just understand that you know, individuals are taking time out from their busy schedule to make this awareness you know, webinar happen, and you know, you need to be you know, displaying your name at least if you're asking, you know, so many questions. And these are questions with reference to AI only AIFs and LVFs and relaxations. Typically, the entire understanding of this webinar is that an investor is in focus, and the accreditation process of that investor to get accredited is in focus, and the benefits once the investor becomes accredited to the investor, that's something that you know, we've highlighted here in the webinar. So for all the other remaining questions, I think of the anonymous attendee, we would like to, you know, skip those questions and move on to the others as well. So just one or two last questions. I'm mindful of the time. We have 4 minutes left in the webinar. So maybe, yeah, I think in reference to foreign investors, Rajesh, would you like to comment? The question is the eligibility criteria for a foreign investor whose country of residence don't require him to file income tax return, something like that. So, and you know, another one, the last one is, what do we have to take care while getting a net worth certificate issued with respect to 6-month criteria?
Okay.
So
First question is that a customer outside India and he's in a country where there is no tax filing. Let's say UAE kind of a case. So what he can do that he can get that income or the net worth certificate attested by a chartered accountant. And the revenue or the net worth has to be in Indian equivalent, INR equivalent certificate will do for that.
Sure. All right. So with
what
that,
was the second question? I missed that second part. Second question.
Just 1 second. The second one was this was in reference to a net worth in reference to some 6-month criteria.
So
it is SEBI have the guidelines. It is clearly written, so we'll have to follow that criteria. So the latest net worth is what we require.
Sure. Okay. I think it stated that what do we have to take care while getting a net worth certificate issued with respect to 6-month criteria? That was the exact question.
6 months criteria in sense, I mean, I also didn't get the question.
Rajesh, I think what the person wants to basically allude to is that a net worth certificate cannot be more than 6 months old at the time of submission. So that's the basic criteria, that you should submit the latest certificate to that extent.
Yeah, with that, we come to the end of the questions and the webinar as well. I just wanted to, you know, thank Rajesh and Vivek. You know, thank you for taking our time and explaining the entire process and the benefits to our audience. And thanks to, you know, all of you that, you know, you attended this, and we just want that, you know, you go back from this webinar with a clear head in terms of understanding of this process, and, you know, disseminate this information in the ecosystem so that we have more investors who take up this entire status and, you know, help create awareness around it. With that, you know, we would like to end the session, and thank you to all of you, and thanks to the speakers for, you know, spending time with us. Thanks.
Thank you. Thanks everyone. Thank you.
Thank you.